What is up, you guys? Pete DiCarlo here, and today we're going to be talking about macerich, or ticker symbol MAC. This is a company that was trading at about $4.81 just a couple of weeks ago, and at that point, I consider it a penny stock. This company is extremely volatile, but I see huge potential upside for this company going into the next couple of years. I started a position today on this. You can see right now, if you take a look, I am down 52 bucks. I only have 300 shares, but I want to go over my bullish thesis, some bearish things to look forward to. Hopefully we can avoid, but some things that you need to keep an eye out on, and an overall breakdown of the company. If you enjoy these videos, hit the like button, subscribe to this channel, and let's get started. So very quickly, we're going to take a look at macerich. I believe that is how you pronounce it. The ticker is MAC. If we zoom out and we take a look at the chart, even though we're investing for the long term, we don't really care too much about the chart. If we just look at a 20-year chart of this, you can see that this stock was trading at highs of $103. And even just a couple of years ago in 2016, 2017, we were trading at $94. Now, do I expect this stock to get all the way back up to where it was? No, I don't. I think that a lot of things would have to happen. We'll talk about that in order for this stock to get back up, but there's plenty of huge upside. Honestly, I would probably be selling this and taking some profits around $30 or $40, but there is a ton of potential upside. Technically, we are bouncing at a pretty strong support of $5, but let's get into what the company does and why I see value in them. But before we do, make sure you hit the like button, subscribe. If you do want to get access to all of my trades and my investments live as soon as I take them, I do have a private academy. I'll put the link down below. You can use the code Academy90 to start for 90% off your first month. So, macerich, let's just give a quick little breakdown of what the company is and what the company overall does. So, they're sort of like Simon Property Groups, if you guys already know what Simon Property Groups is, but we'll go over this quick description here on Morningstar. So macerich Company is an S&P 500 company that invests in premium mall assets. The company owns 29 regional malls in its consolidated portfolio and 19 regional malls in its unconsolidated portfolio, along with 6 power centers, 6 other real estate assets. The company's total portfolio has 50.6 million square feet of gross leasable areas and averages around $801 sales per square foot for the past 12 months, with the consolidated portfolio averaging of $646 sales per square foot and the unconsolidated portfolio averaging around $998 per square foot. So obviously they're a REIT, a real estate investment trust. I have said publicly plenty of times that I think REITs were going to have a horrible 2020, obviously with Rona and everything, and that I thought that REITs going into the next 3 years would be a tough sell for me, especially office buildings, which they don't own many of them. A lot of what they own is upscale malls. If you do want to get a full breakdown, you can just go to macerich.com and you can go and find all of their properties. This is all of the malls that they own, and every single one of them are extremely high value, high upscale malls and shopping centers, which is extremely important because that's something that we're going to talk about coming up once we break down really my overall thesis on this. So if we look, Morningstar has a fair value of $32.50. Now, you do have to take fair value and what analysts say with a grain of salt, but they consider the fair value of the stock to be $32.50. It has last closed at $14. Right now, it's actually trading at $12 because we had a massive run up past couple days, and now we're going into earnings pretty soon. A 1-star price, which is what they believe that this could really be worth, is $56. We talked about that earlier, around their highs. And a 5-star price would be buying this anything below $16. And right now we're trading at like $12.50, which is huge. Some of their biggest competitors are Simon Property Groups, which they own. Simon Property Groups is another company that I'm really looking at long term. I think this is extremely undervalued. The difference between Simon and macerich is macerich really owns the higher scale. Simon Property does own some high scale properties, like for instance, King of Prussia Mall is very close to me. That is one of the biggest and upscale malls in America. They own that. So Simon Property Group is another company that will probably break down on this channel in the future, and Brookfield Property REITs, which honestly, to me, they're out of these three, that's the worst. I think that macerich has the highest opportunity to move to the upside. If we take a look at what their bullish and bearish opinions are, I do agree with all of these. I like using Morningstar. It is $30 a month, but overall, it just gives you a quick little rundown of the company. And for me, looking at hundreds and hundreds of companies a week, it's pretty easy. But they believe that macerich has proficiently managed its portfolio over the past several years, trading out of their non-core assets while reinvesting into their best assets and refining its tenant mix. Macerich's high-quality portfolio will continue to present attractive locations for tenants to place stores even as retail companies look to reduce their store counts and present the most desirable locations for e-tailers looking to establish a physical presence. So I agree with this because one of the biggest bearish things, which we're going to talk about in a minute, is how bad retail is getting killed and how bad malls are right now. Like if you go to the mall down the street from me, it is not King of Prussia Mall, different mall, but if you go to the mall down the street from me, it is like a barren desert wasteland. And you can see a lot of malls and a lot of commercial shopping on foot has subsided a lot in 2020 due to the Rona. Now, even before the Rona, it was still sort of a barren wasteland. However, if you go to these higher upscale areas like the King of Prussia Mall near me, or like a lot of these companies that macerich owns, properties, I'm sorry, that macerich owns, these malls are doing phenomenal. These locations are doing really, really well, especially when you look at a lot of their properties in Arizona, a lot of their properties down south, where it's always warm. Those types of outdoor malls and shopping centers are absolutely killing it. And I think that after the Rona, once things go back to normal, I think those will be the first things to return back to normal. And a lot of these companies that are looking, specifically like Nordstrom's, L Brands, Bed Bath Beyond, I think this part of L Brands, all of these companies that are retailers right now that are getting hammered and starting to come back, they're looking at their portfolio and they're saying, okay, we need to kill off these crappier stores that we have and focus more time, energy, money, and management on these locations, specifically ones that Macerich owns, which is extremely important. Macerich's high quality portfolio remains a compelling target takeover for its REIT peers and other private investors willing to pay top dollar. Kind of going off what we said before, the bullish thing for me about them is they own the quality sector of like the REIT mall section. And to me, that's what's important because I think that higher income individuals will continue to go to the mall, will continue to shop, and will continue to spend their money. So bears say shifts in consumer behavior, greater adoption of e-commerce, and other technological advances will significantly disrupt retailers and mall profitability. I agree with that. Like a lot of things you purchase online, but I still don't see malls completely going away, especially in these higher income sections of the country. And also there's still a lot of things that you have to purchase, you know, by hand. There's some things you just can't order online. Retailers are looking to reduce their store counts and average store size, and so Macerich may need significant concessions to keep their existing tenants and attract new tenants to fill both line and anchor spaces. Kind of what we talked about earlier. Even though I see companies reducing their store counts, I think that they're still going to focus on the major stores that they have, and the Rona could permanently alter shopping habits. If consumers are forced to purchase goods online, the crisis continue to favor e-commerce companies and avoid public spaces. So a lot of that is going to have to go off of the vaccination. How fast can we get back to normal life? How well are these vaccinations going to work? And really, how quickly can we just get back to some sort of sense of normalcy? And I completely agree with that. I think that all of that is priced in though, right? It's not like you're buying Macerich at $50 or $70 where, this thing is beaten down to about $12.75. And this is something that is extremely volatile and extremely risky as far as an investment. This is not like buying an Apple or an Amazon or anything like that. There's a reason the stock has been beaten down. Let's take a quick look at the income statement. You can see in 2018, they had almost $1 billion in revenue. 2018, almost $1 billion in revenue. 2019, almost $1 billion in revenue. So overall, not really growing. However, you have to think in 2019 when they had that revenue for that year, the stock was also trading up around $53 a share. So the market cap has been cut by literally like 75% in just the past year and a half. If we look at the past trailing 12 months, $83 million or $830 million, I'm sorry, in revenue, which actually is not as bad as I originally would have expected with the Rona. Operating income is $13 million this year. I mean, $130 million. I'm sorry. Forgot these are in billions. And their net income is a loss. So they actually took a loss this year, but I'm not expecting them not to take a loss. Like, look at what this Rona has done to everybody, especially, retail and foot traffic malls and whatnot. If we look at total assets, they have $9.18 billion in total assets, total liabilities, 6.53, and total debt, 5.96. So they actually have a 2-to-1 ratio of assets to liabilities. I like to see a 3-to-1, but a 2-to-1 is still very, very strong. They have a lot of cash on the balance sheet, which can hold them through. Unfortunately, if something bad really were to happen again, or if it seems like, for instance, it might take another 8, 12, 14 months to reopen the economy the way that we feel that we possibly could. So overall, I see macerich as a huge buy. I just bought 300 shares, nothing too crazy, but I really see the upside to this. I really think that you're getting a good company at a really, really good price, and they're actually still paying a dividend of 4.28%, which is pretty huge. That's not why I'm buying it. I'm buying this as a rebound play, and overall, I feel extremely strong about this company. This is not a safe investment, like I've said before, but overall, I really feel strong about this. I really like this company, and it has been added to my portfolio. Thank you guys for all of the support. Hit the like button, subscribe. Let me know what you feel about macerich and any other companies that you feel are extremely undervalued. I'd love to look at them. I'd love to do a deep dive on them, and I'd love to share them with you guys. Thank you so much. Subscribe, and I'll see you next time.